The stock market in 2025 is demanding clarity and conviction. Capital can't just drift into yesterday's winners. The margins for error are too thin. What matters now is positioning ahead of the next phase of growth. Semiconductors built for AI, enterprise servers powering global infrastructure, cloud platforms expanding beyond borders, and software giants reinventing themselves with artificial intelligence. That's where the real opportunities lie. Not in chasing hype, but in identifying companies where revenue growth is accelerating, market share is expanding, and valuations still leave room for upside. In this video, we'll break down 4 such stocks. Each of them represents a different pillar of digital transformation, and together they reveal where smart money is rotating right now. Stay tuned. Because these aren't just strong companies, they're strategic positions for investors who want to get ahead of the curve, not follow it. 1. Marvell Technology MRVL, the quiet AI infrastructure play. When people talk about AI stocks, the conversation almost always starts with NVIDIA. But what most investors overlook is the infrastructure layer of AI, computing, the hardware that keeps supercomputers running, the interconnects that move data, and the custom chips designed specifically for hyperscalers. That's where Marvell Technology comes in. In Q2 2025, Marvell reported net revenue $2.006 billion, a new record, grew by 58% year-on-year, a steady performance in a volatile semiconductor market. Unlike consumer-facing chip companies, Marvell's focus is deeply embedded in cloud, 5G, and AI networking solutions. Its chips are the arteries that allow data to flow between GPUs, servers, and storage systems inside AI data centers. Recent updates show Marvell winning new contracts for custom silicon designs, where it collaborates directly with hyperscalers like Amazon AWS, Microsoft Azure, and Google Cloud. These companies increasingly want chips designed specifically for their workloads, and Marvell has become a trusted partner. Another growth lever is 5G infrastructure. Telecom companies rolling out advanced networks rely on Marvell for base station and wireless networking chips. Combine that with its push into storage controllers and high-speed optical interconnects, and you have a company whose products sit at the core of AI scaling. Think of it this way. NVIDIA is the brain of AI, but Marvell is the circulatory system, and you can't build intelligent machines without both. 2. Dell Technologies. Dell, from PC maker to AI infrastructure giant. If you only remember Dell as the company that made your first laptop in college, it's time to reframe your thinking. Dell has completely reinvented itself into one of the largest enterprise IT and AI infrastructure providers in the world. In 2025, Dell generated about $95.6 billion in revenue. Yes, PCs are still part of the business, but the real growth engine is in servers, storage, and AI-optimized systems. The big story here is Dell's partnership with NVIDIA. Dell has become one of the top suppliers of AI-ready servers, critical hardware that cloud providers and enterprises use to train and deploy AI models. For example, Dell's PowerEdge server line has been breaking sales records as corporations and governments rush to upgrade their infrastructure. Analysts project that Dell could see double-digit revenue growth in its infrastructure solutions group, fueled by the AI boom. What makes Dell even more compelling is its recurring revenue strategy. Through IT services, hybrid cloud solutions, and managed security, Dell is moving away from being just a hardware vendor and toward being a solutions provider with higher profit margins. So, while investors still lump Dell in with legacy PC stocks, the reality is it's becoming a critical AI infrastructure supplier. That's the kind of mispricing long-term investors dream of. 3. Alibaba Group, BABA, undervalued global tech titan. Alibaba is often called the Amazon of China, but that label doesn't even scratch the surface. This is a company that touches e-commerce, cloud computing, fintech, logistics, and digital media. In Q2 2025, Alibaba reported roughly $34.57 billion in revenue. That scale puts it among the largest tech companies in the world, yet its valuation still trades at a fraction of U.S. peers like Amazon. Why? because of years of regulatory pressures and geopolitical concerns. But here's where the story gets interesting. Things are changing. Alibaba Cloud remains the largest cloud provider in China and the third largest globally. The company is expanding into Southeast Asia, the Middle East, and Europe, bringing in international clients at a time when AI adoption is booming worldwide. In fact, Alibaba Cloud has started offering AI training tools and infrastructure that directly compete with Amazon AWS and Microsoft Azure. On the e-commerce side, Taobao and Tmall dominate China's consumer market with hundreds of millions of active users. To stay ahead, Alibaba has been investing heavily in AI-driven logistics automation and personalized shopping experiences. And let's not forget Ant Group, its fintech arm, which still processes trillions in digital payments annually through Alipay. While regulations slowed its IPO, Ant remains a massive hidden asset within Alibaba's ecosystem. Here's the key. At current prices, Alibaba is trading at what many analysts call generational value levels. You're essentially buying a $128 billion revenue powerhouse at a discount, with exposure to both China's recovery and the global AI cloud race. For Oracle Corporation, ORCL, the comeback cloud champion. For years, Oracle was considered an old-guard software company known mostly for its databases. But in the last few years, Oracle has staged a massive turnaround, emerging as a serious competitor in the cloud wars. In 2025, Oracle generated over $57 billion in revenue, with a significant portion coming from its rapidly growing Oracle Cloud Infrastructure, OCI. Unlike Amazon or Microsoft, Oracle has focused on providing specialized cloud and database solutions tailored to enterprises that demand high performance and security. What's new is Oracle's AI strategy. Through a partnership with NVIDIA, Oracle now integrates advanced GPUs directly into its cloud services. This means enterprises can access AI training power on Oracle's platform, something that's becoming a critical differentiator. Beyond the cloud, Oracle's ERP, HR, and database systems are still industry standards. These products are deeply embedded in thousands of corporations worldwide, creating a sticky customer base that delivers recurring revenue. Here's the kicker. Oracle is not just surviving, it's thriving. Its backlog of multi-year cloud contracts is growing, its margins are expanding, and it's proving that legacy tech can evolve into a modern AI-powered cloud leader. So there you have it, Marvell, Dell, Alibaba, and Oracle. For companies at the center of AI, cloud, and digital transformation. Each one of these stocks offers not just growth, but also strategic positioning in industries that will define the 2025 to 2030 decade. The only question left is, which of these will be the biggest winner of this bull cycle?